Ladies and gentlemen, welcome back to another Chart Talk 85, coming at you live midday. What is it, 3:11 Eastern time? We got 45 minutes left to the close. We decided we'd get on it early today. We got the market pulling back today. S&P down a mere 1%, still around these highs. We're seeing massive divergences in the market. Tech looks terrible. It's funny. Everyone's expecting these big earnings. We're having record corporate profits and record beats for earnings, and everything's selling off on earnings. And we're seeing, once again, how price action is king. It became a complete sell the news situation. Everyone's expecting the big earnings, and you look at, the runs all these stocks went on into earnings. I'm just typing up Amazon, for example. It ran to all-time highs on earnings. They had the massive earnings, then they've done nothing but sell off on those earnings. Apple, same story, and a lot of these charts. And broadly, we're just seeing the market shift. We look at a couple sectors. We'll look at tech names, and the QQQ right here looks awful. Looks absolutely awful. You look at a name like Apple, looks awful the way it just came in from highs. You type up the XME, which is metals, raging at all-time highs. You look at KRE, the regional banks, absolutely healthy chart, trading at highs here. Let's look at industrials, for example, XLI, just cruise into new all-time highs. So, we're seeing, the more popular names are getting sold off, and we're seeing the market really shift gears here. And it's been really pronounced these last couple weeks. The market, we're pulling back, yes, and you look at the big names like Amazon, Apple, Google, and how they're pulling back, but you look underlying, and there's a lot of names that are still trading really, really well. So I don't think this is going to be a one-day sell-off in the SPY. We might bounce tomorrow, but I think we'll come down to this, more 400 area at some point. But I just think, you have to be willing to switch gears a little bit and switch up the names you're trading because, the growth stocks are just getting crushed. Look at this Pinterest. Look at Teladoc. Teladoc is down 50% in 2 months, and that's just how the growth stocks are kind of trading right now. So I think it's very important to be able to switch gears, and that's what we're really going to focus on next coming weeks. What are you thinking over there, Bennett?
No, I think you touched on a lot of points. I think just broadly for the SPY, again, the key level we're kind of keeping on is 410. That's been that low of this little flag at all-time highs that has been somewhat of support. So again, through that, below 410, we should definitely expect to move at least to 400, that first retest. But like you said, again, we've had traders are like, I can't wait for the pullback. And it's like, today's the first 1% down day we've had in like the longest time. And people are already like freaking out where it's like, all right, well, pullback is going to be 5 to 10%. We
right.
need, to get to, 400, 390, 380 to have a real pullback where this is kind of day one, and
right.
We're starting to see a lot of people get a little scared already.
Well, yeah. The thing about corrections, even the most healthy corrections, they don't look healthy, during
the moment.
Correction,
yeah.
Right? So, I think that's just what we're experiencing. I think tech names are going to be really out of favor for the next, few months.
Yeah. All right, so you want to get into some of the top ideas? Again, some of these are going to be beaten up after today, but we'll try to run through some of them.
Yeah. What?
First one, BCYC. Biotech.
Yeah, man, I wish this had earnings behind it. This one actually looks really good, and healthcare and biotech names aren't trading too badly. Actually, IBB is getting kind of killed, but healthcare in general isn't trading. What is it, XLV? Healthcare in general is sitting at highs. Another sector that's been pretty good. Where are we going from here?
SCL.
Oh, man, this name's so thin, so it made it so tough. But, I came into Tuesday, Wednesday saying this one was like kind of the best idea we had. This fucking thing is broken. Hold up. Enter through this little, all these inside day highs here, this 132 area. This thing looks like it's going to rocket to new highs. Again, it's in it's a chemical name, more of an industrial name. Again, XLI, sitting at highs. Perfect sector. It's fine. Go on.
Next, we have Chewy, that technically is kind of looking like a short.
Well, yeah, growth. This is a growth stock right here. This is a perfect example of what we've been seeing in the market. And if it breaks this area down, this thing could be $70, $60. Look out below. That looks awful.
Yeah. Next, PAYX.
This one looks good.
Paychecks.
Yeah. I saw some people buying this today right here in this 100 area. This one looks great. Again, trading around all-time highs, just grinding higher. Looks really good.
Let's see. NIO. Another one.
Yeah, I was
a
going to
little
say.
bit like short.
Right, growth stock. It's honestly almost as simple as like if it's a growth stock, it's probably getting sold. You know, as we're seeing NIO, electric vehicle name, trades at a lofty valuation, was really highly favored this year. You know, now when it has a good earnings reaction, it can't even maintain a move. Market-wide shit.
I think a name that I don't think anyone even knows about is this JJSF.
Oh, my dog, JJ Snack
Candy
Foods. Oh yeah, they don't even sell like. They have like anti-ans. It's just one of those snack food cyclical names. A lot of like mall foods and things like that. Looks amazing through this 170 area. Thing looks great. Not even flinching. Absolutely.
Another bio is HZNP through those all-time highs at 96, 97 area.
They have earnings tomorrow. I'm not sure before the close.
Yeah.
Definitely want to keep an eye on this one on earnings. But yeah.
And then let's see, we got INTU software.
Software name getting beat up today. Should not be surprised. Yuck. All right, where we going?
Let's see, we got a few more. Let's see, GRWG is getting beat up today. But that was when we were looking up through 48. But now it's kind of holding up at the support area. But again, still kind of in a void.
Right. Growth
Again,
stock.
a lot of this whole list was like again from yesterday. So it's
Okay.
next we have this. Yeah, one more. This MXIM actually just kind of held this little recent support area, but really the key area is that 98 through all-time highs. It just seems easiest to kind of wait for that, unless you pick up some here versus kind of a random pivot.
Yeah, I mean if you trust this bounce, then you could look. But semiconductors they've kind of fallen out of favor as well. They were really hot. Now they're kind of cold. Knowing the sector strength has been very important lately.
Yeah, the CTSH holding up here under this 82, which is kind of blue sky-ish.
Yeah, it could use some more time on this 82 if it really wants to present a really nice setup. Yeah, earnings, tomato.
And one more, another biotech, this 10X TXG. To get through that 200, but definitely going to need some time.
Yeah, that needs time. I got a few. I mean, look at this Caterpillar. This Caterpillar looks amazing after earnings. Just bull flag, all-time highs. It's one of the biggest holdings in the XLI. Just makes a lot of sense. What else? Again, switching gears of names you're not normally trading. Look at this BPFH. That's a really nice flag, 52-week highs. What sector is that in? It's a regional bank, KRE. I mentioned that before. It looks really strong. Again, like this, look at this Honeywell. Again, one of the biggest holdings in the XLI, turning this recent resistance area to new support after earnings. Looks like it wants to go higher from here. We mentioned that PayX. And then one I'm watching is the CWH. They just had such unbelievable earnings. You ever see the show The Profit with Marcus Lemonis?
Mm-hmm.
He's the CEO of this company.
Oh, really?
Yeah. So they had crazy earnings. They doubled up on the EPS side. They beat expectations by 100%. And it's just the post-COVID world, more people are going camping, stuff like that. So this name presents a flag soon. Definitely be interested on the radar for sure.
This guy had a nutty year. This thing went from 47 to almost 3, back to 47.
Yeah. No, I think he took over as CEO I don't know, maybe around COVID. He's not, he was a big reason for the stock getting pumped.
Yeah.
But the earnings were there too, so it's fine.
Nice. All right. Any more names you want to go over for top ideas?
No, that's really it.
All right. So we had one main question, and that is, what broker do we recommend? Shake, if you want, I'll say this one really quickly.
You got it.
All right. So we typically recommend there's 3 different brokers. One is going to be, if you're just regular trading, TD Ameritrade is probably the easiest. They have a very good platform. We made this video a while back when we used to still recommend kind of Robinhood, but with the recent stuff with them, it's probably easier to kind of trade somewhere else. So again, TD is probably the main one. If you're looking to hold long term, M1 has been a great vehicle to use. You can build out an automated model. You can set up retirement accounts there, very easy. And then for the international traders, Interactive Broker is probably the best bet. And or for someone who's trading more actively, like Shake, he uses Interactive Broker. So if you're more active, probably that might be a good spot. But those are typically the main 3. TD, if you're just regular trading, regular retirement accounts, college accounts for your children. M1 for more automated kind of set and forget. And then Interactive Broker if you're trading internationally outside the United States or a little bit more of an active trader. Those are the main 3 that we would recommend to use.
All right. Good stuff.
All right. All right, so Jake, you want to get in a good and bad trade?
Yeah, I mean, I was on the wrong side of the, I was in a lot of these QQQ names, like, so they're just, they didn't work out the upside. First one is Snap. I love this, the way this traded, what is it, post earnings, they're still in this macro range. Earnings were amazing, but the common theme, what we've been seeing, these lofty value tech-related names, they're just selling off right now. These are not the names that are in favor. We're seeing the market change dynamics. So, I mean, I had a couple names like that. I tried buying the dip on Apple, a couple days ago. Just never really had any semblance of working, especially you see today's price action. Things like that. So it's like, I'm switching gears a little bit. I'm not going to be focused on these names as much. It opens up, the research game. I'm telling you about regional banks. Something's changed when I'm like, yo, this regional bank looks sick.
Couldn't agree more with you on that one.
What do you got?
All right, so first one, you want to pull up those charts in the bottom of the email is that QLYS.
Yep.
All right, so this is one, we were looking at this breakout through 108, literally ticked it, didn't really go an inch higher, had a little intraday the following day, and at that point, again, now, QLYS, below 100 at 95. So it was just, for me, it was, couldn't go any higher. It was time to get out. Took the 2% loss. And now with it, more than 10% lower, it seemed much smarter taking that little paper cut than trying to hold it versus, the proper out, which was versus kind of that 102, 100 area. Next was this TEL. Similar, kind of similar thing. This was a blue sky breakout through that 136 area. We got 1 day of follow through. Immediately came back to my price where, if, we're expecting a stock at all-time highs, breaking into new all-time highs to continue higher. There should be continuation higher, not just, a $2 move higher. So same thing. It's coming back to my price. It's more likely going to come back even lower than that, more likely to even come to the nearest pivot. It's easier just to take the break even, keep the money versus losing money in it and being annoyed with it. So again, this TEL break even trade, today kind of pulled back a little bit, but again, prior trade lost 2%. This one was break even, just kind of keeping things light. Also, with next one over, other one was this Snap, again, still in it. I actually added through that 64, basically ticked the high of that little shorter term move, still in it. But again, I've been in it for quite some time, so I'm just trying to dollar cost average into it. Still think that we have to kind of push below that 48 and shake that area out before we start to see any turn in the name. So it's probably off the radar for most, for at least like a week or two. And then some of the names still working. Again, like this UPS is just...
yeah, I still got this. This is amazing.
Yeah, just doing, just what's expensive gets more expensive. We just kind of sit with it, keep holding it. So it's been a very good swing. So
still holding half. Woo, some of us still holding whole.
All right, well. Can't have it all. But yeah, so those are the main ones for this week. Again, a lot of it's been light. I don't really have many orders. I actually have no orders in the system, so nothing. Doing less is more, I think, right now.
Right. And this is like Evan. We were talking about how badly we needed this pullback for weeks and weeks and weeks now. We're finally starting to get it, and I think it's we're still in a macro uptrend. We're pulling back like 2% on the day. We're really down not much compared to the action we've seen lately. So it's like, I think we come down more, but I think it's going to lead to a lot of great opportunity that we haven't really seen the past month because we've just been chopping around the highs. It's been such a difficult back and forth environment. So, I think this pullback is very necessary.
That's why even like we mentioned, like for names like Amazon, just retested that prior all-time high, like almost to the penny.
Right.
We always talk about, and I think that's kind of the funny part where after the fact it's so obvious, but into the retest, it's always so hard to realize that the first retest typically gets sold. Where in Amazon, as it got up there, it's like, oh, it's definitely going to 4,000. But again, it's just that retest. Sellers are coming in, they're pushing it back down. Where now, if Amazon pulls back into this range near 3,000, we should be looking, for a lot more of those support buyback setups in these names where we didn't have those opportunities these past few weeks, as most names have been, very extended. So
and
they have to get that shopping list ready.
Yeah, definitely get the list ready. But it's so funny. It's like the market changing dynamics. I keep mentioning it because it's just so imperative right now. These Amazon earnings came out, absolute blowout quarter. They're trading around all-time highs. A couple analysts came out with like $6,000 price targets and all these things. And it's like if that happened, let's say, early like January when tech was firing or something like that, I would expect a big breakout. But now that just caused a sell-off. It's just important to note the changing dynamics in the market. I don't think I could say that enough today.
Yeah. definitely agree. All right, so we want to go to book of the week.
Oh, okay, I'll start. I was just reading this. I just started some Skin in the Game. Nassim Taleb. Really, really smart dude. Really, really great writer and everything. It's such a dense book. It's so hard to, just say a few sentences about it. In the first few chapters, he really talks about the differences between true skin in the game versus, he keeps mentioning this Citibank, some executive or whatever, and where they don't have real risk on the table. These things in society where it's like in the 10 years leading up to the housing crash, he made $120 million from Citibank, and now when the housing market crashes, he's not writing checks to pay it back. That's when they get bailed out. So that's kind of the stance he takes, and he says like, don't be that guy, or don't be in those type of industries. Talks about like Hammurabi's code, an eye for an eye. Just talking about how true skin in the game. If you're really taking all the risk, you deserve all the reward. If you're taking that full risk, like the Citibank banker, that's when you become a problem to society. And then there's all these outward things that kind of fall over because of it. Kind of like a domino effect of things you can never see happening. They talk about how because there was, real quick, is it Iraq or something, where they had, back when the Afghanistan war started, we were training all these guys to take out the what is it, the dictator. I don't remember the specifics of what it was, and we were training all these guys, and that's the bureaucracy where it's like politicians in their air conditioned room are making these decisions to train these counter-terrorists, and that's how Al-Qaeda actually started. It was those counter-terrorists who actually, became terrorists in their own right because, not having the full risk, the full skin in the game led to all these outward events that you couldn't foresee. So I thought it's just very interesting.
Yeah, even with the skin in the game part, when we talk about like mutual funds, 99.9% of mutual funds can't beat the S&P. And again, these professional managers, that's their sole job, is to beat the market. Where when you look under the hood, the reason why most of them fail, and the ones that do beat the market, there was like 28 out of 8,000 mutual funds that beat the market in the last decade or beat the S&P. Those 28 funds all had managers that had at least $1 million of their own money in the fund. And that's what, when you talk about skin in the game, the other 99% of managers, they're getting a salary. They don't really care. Obviously their incentive is to make money, but it's not their money is not at stake. It's the investors' money.
Right.
So I've been actually trying to find out, like for Kathy Woods, to see if she has what her personal investment is in ARK. I just have not been able to find if she actually has any skin in the game in those funds, because she's been a very popular name recently as like a fund manager.
Yeah.
But again, the only book I'm reading some of those, the Anti-Fragile book and the Skin in the Game book, but I'm also reading The Origin of Financial Crisis, which Nassim recommends in his book, which he says is like a staple, recommended book to read in finance, which so far I can't say the same, but there's been only kind of one good line that I can take from it. And it goes, to the efficient market school, the constant price change observed in financial markets are the result of those markets responding to a constant stream of new information. So, 2 days ago with the market, with these names at all-time highs, seemed like great information, but we're starting to see traders kind of selling that news. So not really much out of this book. I don't think it's really worth reading yet. It's a lot about central banks, about bubbles, but I haven't really got to the bubbles part yet.
All right.
So
right,
we're both on some dense books that probably you can live with.
Look at us. Yeah, look at us.
Look at us. Hey, look at us.
Look at us.
Huh? Who would have thought? Not me.
Just expanding our informational horizons. All right.
Yeah.
We wrap this thing up?
Yeah.
All right, quick one. All right, see you guys next week. Happy trading.